Today I have a very special guest with me. It is Sumant Sinha of ReNew Power, who has made headlines for a massive listing directly at the Nasdaq via SPAC. We're going to understand more from Sumant Sinha himself, who's joining us. Sumant Sinha, a big congratulations. You know, we've had lots of unicorns talking about how they're going to look at the SPAC route, etc. But along came ReNew Power. It has done it. We're talking about an $8 billion deal and a merger. Can you tell us a bit about it?
Yeah, sure, Nayantara. First of all, thanks so much for having me on the show, and thank you for your congratulations and good wishes. Let me say a little bit about the transaction. So we are actually technically merging with a SPAC called RMG Acquisition Corp II, which had $345 million of cash with them. In addition to that, over the last month or so, we've been talking to investors. And as you know, with all of these SPAC transactions, there's always another additional component of capital raise called the PIPE, which is also involved, which is really a private fundraising transaction done directly with investors. So we've been doing that. And we've raised $855 million through that particular part of the transaction for a total of $1.2 billion. And basically, of that $1.2 billion, the company is being valued at $4.4 billion of equity value, $8 billion of enterprise value. And a couple of months from now, when the deal closes, we will then be listed on the Nasdaq under the ticker symbol RNW, standing for ReNew.
When are you going to ring the bell? Do we know when that's expected at the Nasdaq?
You know, Nayantara, I would love to do that. As you know, that's one of the aspirational things that every entrepreneur likes to do. These are, we're living in strange times. However, this is a virtual world. But hopefully, I think once all of this is behind us in terms of COVID and so on, then perhaps sometime this summer, once the deal is closed, hopefully then.
So by the summer, you're hoping that the deal will be closed. Now, Sumant Sinha, I want to understand from you, why did you go down this route of a SPAC merger? Yes, it's been making a lot of waves globally. In fact, one of the biggest advocates of this, Chamat, is one of your investors, is backing the SPAC, all of that. I want to understand from you why you went through this and not what most of us in India usually read about, whether it's an equity raise, an IPO. Why a SPAC?
Well, Nayantara, for us, the important thing really was to get a listing done. And, we were looking at various markets, of course. We were hoping that the direct listing route might come through. So we were looking at various options. But it was the natural thing for us to do in the, in terms of the evolution of our company and to provide exit to some of our shareholders. So the question really was, which market should we look at? And how should we list in that market? So when we were looking at various markets, obviously, we came to the conclusion that perhaps the US market, with its really strong theme of ESG investments right now, and its very deep and liquid pool of capital, might in fact be a good market for us to access. Now, then the question became, okay, what is the right way of doing that? In the normal course, you would have done an IPO, which would have taken, the usual time that it would. Now, in the context when we started looking at the US market, and there was some degree of reverse inquiry, several SPACs approached us and said, would you consider doing a listing through us? And when we looked at the whole process, we found that in fact, it was a very credible alternative path to getting a listing done, which really was our end goal. And so therefore, we decided to go down this path. And I must say that it moved very rapidly. We got really good partners as our SPAC partners. And, the whole process took maybe a couple of months at most to consummate. And so here we are. But our end goal really was to get a listing done. Whether we do it through a SPAC, whether we do it through a direct listing really was less relevant to us. We also saw was that last year, almost half the listings that had happened in the US market actually happened through SPACs. And so therefore, the SPAC process and route has now become a very viable way of getting to the public markets. And so I think that's really why we decided to go down this path.
Sumant Sinha, I'm going to ask you to do something a little basic for all of our viewers. Not all of them may be familiar with the SPAC. How would you explain it? And would you say that just wanting to IPO is a good enough reason to do a SPAC?
Yeah, so let me just explain how a SPAC works. So what happens typically is that a few sponsors get together and they go to the public market in the US. They raise some capital, typically in the range of between $200 and $400 million. And that company that what is now called a SPAC, or a special purpose acquisition company, then gets listed on either Nasdaq or whichever other stock exchange that they choose to list on. So now you have a company that has a certain amount of capital and that has the stock that is listed. But really, it's trading on a notional basis because all it has is cash as its only asset. And so it trades mostly at par. Then depending on the sponsor of the SPAC, depending on what their investment thesis typically has been, they look for companies that are looking similarly to get listed in the market where they are listed already. And so there's a coming together of minds between the company and the SPAC. The SPAC then says, look, I already have this much capital. Is this what you require, or do you need more capital than this? And typically companies would say, look, I need another 100, 200, 300, whatever amount of capital they require for their primary and secondary purposes. And that extra amount of capital, let's say if the company needs 500 and the SPAC has, let's say, 250, then that balance $250 million, then both the SPAC as well as the company jointly approach institutional investors in the US. And there's a fairly well laid out process for this to happen. Those investors then engage in conversations with the company and the SPAC investors, decide if they want to come in or not. And if they do decide to come in, then that part of the transaction is called the PIPE process. And so between the PIPE and the SPAC, the company then gets access to this pool of money, which is then what the company ends up getting for its primary and secondary purposes. And then once all of this is done and the deal is announced, as it has happened in our case, the company then files with the US SEC certain registration statements. And once those are approved and all the other regulatory approvals have been obtained, then you go through what is called a de-SPACing process, which is nothing but the technical merger between the company and the SPAC, at which point in time the SPAC gets renamed into the company and the company starts trading on the stock exchange under its own ticker symbol. So it's just a different way of getting listed. I would not say that it is, it's now become very common. And unlike in an IPO where you file with the SEC and that takes a few months and then you do the marketing process, in the case of a SPAC, you first do the marketing process, build the pot, build the capital that you're looking to raise, and then you file with the SEC. So it's a little bit of a different process, but the end result is the same, which is that you've raised capital and you've got a listed stock at the end of it.
You know, if I take out data, and this is data as of February 25th, in 2021, we've already seen SPACs raising more than $45 billion. In 2020, a record $82 billion had been raised via the SPAC route. Do you think, and you're a stalwart of Indian industry and you get it all, do you think this is the way that Indian entrepreneurs will also go?
I think it's a very credible path to becoming a listed company. It's another path. I would not say that it is the only path. You can still do a regular way IPO as well. But I think going through a SPAC where you then have the sponsors of the SPAC as your partners, who then stand side by side with you when you're talking to US institutional investors who otherwise may not know very much about India or about the Indian business, I think it certainly helps. And so therefore, if you get a really good partner in the form of a good SPAC, who can also tell your story credibly, who has good standing with US institutional investors, who's also done diligence on your company and is able to relate that to US investors, I think can be very important. Certainly was in our case because, we were in fact the first SPAC out of India. And so therefore, a lot of investors did not know the Indian market very well. And so having a sponsor of a SPAC who could say that, look, I understand, I've done diligence, I spent time with the company, and so on. I think that does have value. Going into it, I must tell you that one of our biggest concerns was whether US institutional investors would be familiar enough or comfortable enough investing in large amounts in a in an Indian company or in an India-only company. And so in our case, of course, that question was answered very strongly positively because of the demand that we saw. But it may be different in different sectors. And so I think there is certainly merit to going down this path. Now, it's not, I think, that every company can do this. I think you need to have a certain degree of size and scale. In our case, of course, we're a mature company. We had EBITDA, we had cash flows, all of that. So that obviously helped us as well.